Hi, I'm Lorna Illingsworth, a mortgage advisor for Protection Investment Southampton, and today we're going to look at joint mortgages with parents. If you're unable to get a mortgage on your own, you may be considering getting a mortgage with your parents. This may be a traditional mortgage where you and your parents own the property and get the mortgage together. Or it may be a joint borrower sole proprietor mortgage. This is where you only own the property but your parents are on the mortgage, like a guarantor. What is right for you will depend on your circumstances and your parents. The benefits to getting a mortgage with your parents is that you may be able to get a property that otherwise you wouldn't have been able to. Their income could be used to help you afford the mortgage that you need. There are implications to consider before getting a mortgage with your parents. If your parents own their own property and own the property with you, this could mean you have to pay higher stamp duty tax. The lender may also have an age limit. Typically means that the mortgage term cannot go past this age, such as age 70. This means the mortgage payments may be more as the loan is over a smaller term. If a joint mortgage with your parents is not possible, but they still want to help you, you may consider other options, such as a gifted deposit or guarantor mortgages. Saving for a deposit can be the hardest part of buying their first home for first-time buyers. Gifting or loaning a deposit is one of the most common ways a parent can help their child buy a home. You typically will need to provide proof of where the money has come from as part of money laundering checks. If gifting, you will need to confirm that you will not want the money to be paid back, and if loaning the money, confirm this as the lender may factor in the repayments. You will also need to sign a declaration that you'll have no legal interest in the property. Depending on how much you gift and the value of your parents' estate, there may be inheritance tax to pay if they die within 7 years of handing over the money. As saving for a deposit is difficult, especially for those renting, a gift towards some or all their deposit can help first-time buyers get on the property ladder. A bigger deposit may also give you access to more providers or better rates. It's worth considering that gifted deposits may not be accepted by all lenders, and the gift could be liable to inheritance tax if the parent gifting the deposit dies within 7 years. The parents will also need to ensure that they are comfortable gifting this amount of money, and this will not affect their standard of living. A guarantor mortgage is for someone who is unable to get a mortgage on their own. So a guarantor will agree to take on responsibility for your repayments in the event you can't pay. Normally the guarantor will need to be a family member, and the guarantor will not own a share of the property or be named on the deeds, but they will be liable for the mortgage. These types of mortgages can be referred to as a family boost, family assist, or family mortgages, depending on the lender you get your mortgage with. There are different variations of guarantor mortgages. Some will only require the guarantor to be legally liable for repayments, but others may require that the guarantor provide further security, such as their property or savings. This gives the lender an extra layer of protection that they'll get their money back if the main borrower is unable to pay. It's normally a requirement that the guarantor takes independent legal advice to ensure that they understand the implications. The main benefit of a guarantor mortgage is that it can allow you to get the mortgage and property you want that you wouldn't have been able to on your own. These types of mortgages are best suited for first-time buyers who have a small deposit or low income. The main risks to consider for the guarantor is that it could damage their credit score if the main borrower fails to make the mortgage payments. The guarantor's property or savings could also be at risk if all or some have been put down as security for the loan. It's also worth considering the emotional side of a guarantor mortgage. It could create a serious strain on your relationship. If you're interested in getting a joint mortgage with your parents, please call us on 02380 66 8407 or visit our website at www.pillsouthampton.co.uk.